Welcome everyone to this Nadex webinar. I apologize, I'm starting a minute late. It appeared I was having some challenges sharing my screen, which, while I have to admit I've got a face for radio, it would not be a very good webinar if you couldn't see the slide deck or the screen share when I got on there. So one, I want to welcome everyone and thank you for joining me. My name is Todd Rich. I'm head of education here at Nadex. And, because I'm noticing this is being delivered over the internet and we might be having some slight technical difficulties. The internet is not always perfect. I want to make sure that y'all can hear me. So you've got a little questions box. If you could just chat in there and just tell me that we're all clear, that you can see my slideshow and that you can hear me, that would be greatly beneficial. We've got a pretty good crew on here today. And a great audience. We got a big audience, so I just want to make sure everyone can hear me loud and clear and that I'm coming through, and then we're going to jump right into it in a second. All right, perfect. Thank you for that. Okay, excellent. Whew. Okay, I can breathe a little easier. All right, let's get into it then. This is short-term price action at Nadex. This is part one. This is part one of a two-part series. Today, we are going to be discussing binary options. Next week, we are going to talk about some other products that Nadex has for short-term price action, namely knockouts and call spreads. So we will get to all of it, but today is all going to be about binary options, the primary reason that people come to Nadex. Now, before I jump into the presentation, I do need to share this disclaimer that trading involves risk and may not be appropriate for everyone, that any trading decisions you make are solely your responsibility and at your own risk. And this is an educational session. Please do not construe anything I say as a buy or sell recommendation. That will become abundantly more clear when I get into the, when I start playing around in the platform and I do a little bit of what I like to call off-roading. Excuse me for that. I got a little cough. All right, so what are we going to cover today? Here's our agenda for the next 45, 50 minutes. It could go an hour depending upon how questions come in, because I do like to make this a bit of an interactive session. And while you've got my attention, I'm all ears for questions. And generally speaking, if you've got a question, somebody else does as well. And I want to make sure that I'm being clear about what I'm describing. I am going to start off with a very brief, quick discussion on who is Nadex. And the reason I do that is we've got a lot of new traders in the Nadex markets. You've probably realized that a lot of people have come into the trading world, particularly during the pandemic. I do like to tee up who is Nadex and what it is that we offer. And then we're going to get into binary options. What is a binary option? How do they work? Understanding how the price of a binary option moves based on time and the price of the underlying, and we'll get into that. I do like to talk about the variety of choices that Nadex has, because Nadex is very different than other binary option providers you might find on the internet. We will get into that. And then, as I mentioned, it is going to have a very practical demonstration. At the end, I am going to show you, and we're going to spend some time playing around on the platform. And in fact, I'll offer this out now when I'm doing some examples. If you've got any product that you would like me to do an example on, whether it's a Forex product, an equity index product, a commodities product, gold, oil, natural gas, if you want to chat it in there, I will use those as my example for whatever whatever anyone would like to see. Please, by all means, share with me. This is an interactive session, as I mentioned. You've got that questions box. Please type questions in. I will try to answer them as I go, or I will circle back at them at the end to make sure that I was clear on all of the concepts that I'm about to discuss. Oh, by the way, and I forgot I had this in here. If you're new to Nadex, and even if you're not new to Nadex, a lot of people aren't quite aware that we do run a refer a friend program. And this is, if you have a live account, I'm going to be doing everything in a demo environment, but if you have a live account, you can invite your friends. You've got your own personal link. It will be in your, and I'll show you where you could find that little link. But if you share that with your friends, if they use that link to sign up, and if they place 5 trades within 30 days of applying for their Nadex account, we will give them $100, and we will give you $100. So they get $100, you get $100, everyone gets $100. And you can do that with up to 10 friends, which means you could theoretically end up getting $1,000 in your Nadex account to trade with. So it is a very cool program that we run. And a lot of people, when they're trading Nadex markets, because they're fun, because they're exciting, they sometimes will often trade with their friends. So why not take advantage of that bonus offer, that refer a friend program that we've got. Okay, so let's start off with who is Nadex. Now, Nadex is an acronym for North American Derivatives Exchange. That's what it stands for. In the financial services space, we love our acronyms. It is a CFTC, Commodity Futures Trade Commission, regulated exchange. Now, I highlight that word regulated. I will tell you there are only a few binary option exchanges that are approved to trade in the United States. There are very few. We are by far the largest one, where 99% of the volume is traded. Now, the reason I emphasize regulated is there are binary option providers that you might find on the internet. Now, in all likelihood, they are not regulated by the CFTC. The CFTC is the same regulator that regulates large futures exchanges in the United States, like the CME, the Chicago Mercantile Exchange, or ICE, the Intercontinental Exchange, and they own the New York Stock Exchange. So we have to adhere to all the rules, laws, regulations, principles of the United States. There are other people out there, there are other binary option providers in the world that don't. And the reason I mention that is if you were to have a challenge, a problem, you were looking for some sort of recourse if there was a problem, for instance, not being able to get your money out of your account. If you're on an offshore unregulated exchange, caveat emptor, buyer beware. You're not really going to have much of a recourse path to seek remediation. Nadex is a regulated exchange in the United States, and we have to adhere to all the laws of the United States. And so a lot of those challenges that you might hear from offshore exchanges, and there are some nefarious operations out there. Nadex is simply not one of them. Now, what is Nadex? What is it that it offers? And this is why most people are here. Nadex designed contracts for the retail trader, specifically. And this is becoming now a much larger movement in the United States as some of the larger exchanges realize they were leaving a lot of these retail traders behind, but they still are nowhere near where Nadex is. And what do I mean by contracts designed for retail traders? They have a very low cost to entry. To trade Nadex, you can do so with tens or hundreds of dollars. You do not need thousands of dollars or tens of thousands of dollars. You can do so with very nominal amounts of money. The other thing that Nadex offers are all of our contracts. All of our contracts have defined risk. Now, that means there are no surprises. When you get into a Nadex trade, you can't lose more than what you put into the trade. You can't lose more than what's in your account. You can't lose more money than what you have. If you trade other futures products where it necessarily involves things like margin, initial margin, maintenance margin, margin calls, that is not Nadex at all. We have very small notional size contracts for the retail trader, low cost entry, clearly defined risk, no surprises, which is a great way for people who are sometimes new to the markets. It gives them bumper guards and to protect them so that some surprise, and usually a surprise is something bad, doesn't happen, you know exactly what you're getting into before you enter a trade, and you can't lose any more than what you initially put into it. And Nadex does offer these binary options, and that is where people are looking for this short-term price action, which is exactly why you're here for this particular session. So let's define a binary option first. So what is a binary option? And a binary option is a contract. It is a short-term defined risk reward contract, and it's essentially a prediction. It's a statement, and it's made up of three components. There are three components to it. Oop, I went a little too fast there. Let's just leave it here. That component, there's an underlying market. Now, this is something that differentiates Nadex. Is okay, and I love that people are, by the way, putting in. We're gonna, you know what? I'm gonna use gold as an example today, because I've got somebody who said, hey, let's talk about gold and Forex. I've got somebody else who said specifically gold, and another person who said, did you see what gold did this morning? So I'm going to use gold as the example for now, and then when we get over to the platform, I could show a few different things. But let's just talk about that underlying market. We've got gold. Then there's going to be a condition. So that condition, it's sometimes called the strike price, a fancy word, or a level. And then there's going to be an expiration time. So with a binary option, it's will it be greater than? So this is your statement for a binary option. Will gold, your underlying market, be greater than $1,800 an ounce, the condition or strike price, at a certain period of time in the next hour, in the next 2 hours, at the end of the day, at the end of the week? You're going to have a variety of choices. So this is what makes Nadex a little bit different from other binary option providers, is we offer a variety of markets. For each one of those markets, we're going to offer a variety of conditions. Will it be greater than 1780? Will it be greater than 1790? Will it be greater than 1800? Will it be greater than 1810? You can choose the level that suits your prediction. And then we're going to offer a variety of expiration times. So then again, you can choose, do you want something that's very, very short term? Do you want something medium term? Do you want something that goes out for the week? And there is a reason why we offer all of those. And it's so that you can choose what suits your trade, your trading style. You get to pick. We're going to get into why all those things matter in a moment, but I just wanted to tee up what is a binary option: short-term defined risk reward contract, and it's a prediction, a market, a condition, an expiration time. Will gold be greater than 1800 in the next 2 hours? And here's something else that differentiates Nadex. You can buy or sell these. So you can buy a binary option. You can also sell a binary option. And I will get into the nuances there, because some people say, how can I sell something that I don't own? And really, it's just you're taking a short position. In these predictions, we're going to get into that in a second. I don't want to get ahead of myself. But you can predict it's going to be above or it's not going to be above. And it doesn't matter whether you're buying or selling. Either way, your risk is known before you enter a trade. Now, so is your reward. So all of that, and we calculate that for you, and we've got some new functionality around that that is really cool. But you know exactly what you're potentially getting into before you enter the trade. And a binary option will trade, and when you look at it, the price of a binary option will trade between 0 and 100. And that 0 and 100 represents two separate things. And if my audio goes out for you, try refreshing your browser. Give me 1 second here. I should have said this earlier. If anyone hears me now, because this is being delivered over the internet, if the audio goes out, just refresh your browser. And by the way, I am recording this, so you'll be able to play it back again later. All right, so binary option trades between 0 and 100. Now, I mentioned that 0 and 100 represents a couple different things. We'll get into that in a moment. Now, when you're trading a binary option, it is a true or false prediction. Either the event is going to happen or it doesn't happen. All right, that is why it's a binary option. It's got two and only two outcomes in the end. If the statement is true, the binary option will settle and go to 100. If the statement is false, it will go to 0. Okay, so that is why it's a binary option. That's the very first thing. Is it's trades between 0 and 100, and it will trade, and then in the end, is gold will gold be greater than $1,800 an ounce in the next 2 hours? If it's above 1,800, it's true, it goes to 100. If it finishes at 1,800 or lower, it's false, it goes to 0. Now let's talk about what that price actually represents. And when you look at that price between 0 and 100, you can think of it as roughly reflecting the probability of the event being true as determined by the marketplace. Now, that is the first thing that that number represents. It is a probability. That is really what you're ultimately looking at when you look at that price. So, for instance, if I'm looking at the binary option, will gold be greater than 1,800 in the next 2 hours? And let's assume for a moment that gold is trading exactly at 1,800. At that moment in time, there's an equal chance, equal probability that gold will settle above 1,800 or below 1,800. So you would expect the binary option to be trading somewhere around 50, or a 50% chance that it's going to be true at expiration. Now, if you're looking at will gold be above 1,800 in the next 2 hours, and gold is currently at 1,820, it's already above the current the prediction price, right? So there's probably a higher probability, greater than 50, that it will settle and stay above 1,800 at expiration. So you might see that trading at 60 or 70, meaning a 60% chance, or a 70% chance that it will finish at 100, that it will finish above 1,800 and settle at 100. Now, if the price of gold were below the condition, below the strike price, it would have to get up to the strike price just to be even at 50-50. You'd expect it to be a little bit lower than 50. So if gold were trading at 1780, depending upon price and volatility, you might see the binary option trading at a 30% or 40% probability, because it still has to go up just to be 50-50, and it would have to settle above there. But in the end, it's either going to go to 100 or it's going to go to 0. So that's the first thing that that price represents. It is the probability at that moment in time that the market is pricing the probability that it will finish at 100, that it will finish in the money. And that is determined by the marketplace. All right, everyone can buy, everyone can sell, and you'll see that in the price of your binary option. So that's the first thing that that number represents when you're looking at 0 and 100. Now, this is really important. If you're familiar with other types of listed options, time to expiration and volatility will impact the price of those probabilities. In a high volatility environment, the probabilities will be adjusted accordingly. The marketplace will determine that. If there's a lot of time or a little time left to expiration, that will also impact the price of the binary option. Now, I'm going to go through examples so that it is very clear what I mean when I talk about how price and time can impact the value of a binary option. Now, the first thing that number represents that you're trading, I mentioned, is the probability. That's really important for you to understand that concept, that it roughly represents the probability that it will be true, that the event will occur, and that the option will settle at 100. Now, the other thing that represents is at Nadex, we made all of our contracts worth $100. So while it's trading between 0 and 100, it is also the notional value that you're trading. Since the contract can be worth a total of 100, in the end, if it's true, it will go to 100. It's going to $100. Now, if you're buying a binary option and you buy one for 50, you're going to be you're going to have to put up $50. You bought one for 50, you're going to put up $50. If you buy one for 20, you're only going to put up $20. Now, if you buy one for 80, you're going to have to put up $80. Now, because they can only go to 100, you also know that's your risk. When you buy one, your risk is how much you paid for it. So if I buy one at 80, I had to pay $80. It can only go to 0. So most of my risk. Now, it could also only go to 100. So I'm going to put up $80, and if it's true, it would go to 100 and I would make $20. Now you're asking, why would someone pay $80 to only potentially make 20? Well, it goes back to the probability. It's an 80% probability at that moment in time that it will go to 100. So it's a high probability that it will, 80% of the time, it should go to 100. That means 20% of the time, it will go to 0. So it's a matter of balancing the risk reward. Now, I mentioned you could sell these as well, and I'm just going to put this up. The collateral that you put up on any trade is the most that you can lose. Now, if you sell a binary option, right now, if you sell one, let's say I sell one at 50. If I sell it at 50, it could go to 100. So my risk is it goes from 50 to 100. I'm going to have to put up $50 because I sold it at 50 and it could potentially go to 100. I'd have to put up 50. And what could I potentially make? I could potentially make 50 because it could go to 0. Now, if I sell one at 80, all right, I'm hoping it goes to 0. But it could go to 100. If I sell one at 80 and it can go to 100, I'm going to have to put up that $20 that it potentially goes to 100. Now I'm risking 20, but if it is a false statement, if it settles at or below the strike price, it will go to 0. I will have only risked 20 to potentially make 80. All right. We do all of this math for you on the order ticket, and I'm about to bring up an order ticket, and we've even got some really cool new functionality which helps you understand the ratios, the return on your investment. We put it all on the order ticket. All of this is on the order ticket, and we calculate it for you before you enter a trade. But it helps to understand that that number that you're looking at represents two things. It is the probability that the statement will be true, and you can buy it or you can sell it. Now, why would you sell it? You think it's going to be false. You buy if you think the statement is going to be true, the prediction is going to be true. You buy it because you think it's going to go to 100. You sell it because you think the prediction is going to be false, because you think it's going to go to 0. And in the end, because they're binary options, they either go to a 0 because it's true, or they go to a 0 because it's false, or they go to 100 because it's true. Now, I am going to show you an order ticket because this makes it so much easier to understand. When you're looking at a binary option order ticket, this is what you're going to see. First, you're going to have an indicative price on the order ticket. So in this case, we're looking at the US 500, the S&P 500, and we've got a very clear statement. We've got an indicative price of the market where it is. There's an expiration time. All right, we said, all right, here, currently the S&P is trading at 43.50. This contract's going to expire in an hour and 23 minutes, and we've got the actual prediction. Will the S&P 500 finish higher than 43.54.50 at 1 p.m.? So you've got your market, the S&P 500, you've got your condition, higher than 43.54.50, and you've got your expiration time, 1 p.m. And you currently see that now the market's currently trading 43.50. That's in the upper left-hand corner. And the prediction is, will it be greater than 43.54? So it is currently below, where it needs to be for it to go to 100. Now, then you're going to have your market. All right, there's a bid and there's an ask. Now, if you look at the midpoint between the bid and ask, all right, it is exactly 33.75, right? Now, I got a bid at 30. If I want to sell this, I could sell it at 30.75. If I want to buy it, I could pay 36.75. And first, actually, let's just start before we get before I get ahead of myself. I do not have to trade on these markets. All right, I can, if I choose, if I want, I could potentially put an order between the bid-ask spread. We have what is called a central limit order book. Everybody who participates on Nadex exchanges can put a bid in the market. Anyone who participates can put an offer in the market. Your bid can be with the current price, it could be below the current price, or it could be between the bid-ask spread. I can put an offer to sell at the current price. I could offer one higher if it were to go higher, or I can offer one in between the bid-ask spread. The more people that are trading, the more people in the markets, the narrower that bid-ask spread might get. But there will always be a bid and an ask there up until the last few seconds of a contract, which I will get into. And you'll be able to, if I want to sell one, I see the highest bid that I could sell it at. If I want to buy one, I'll see the lowest offer I could buy one at. But I could choose to try to trade between the markets. And if I put an order in between the markets, everyone will see my bid or my offer. I'm going to show you that in an example. And will you necessarily trade? Maybe. You don't have to trade. No one may want to trade with you, but you can advertise your price. Now, at the bottom of the order ticket, if I were to try to buy one at 35.50, as you can see in this example, I know that it would cost me 35.50. All right, I'm gonna have to put up 35.50. And what could I potentially make? Well, it could potentially go to 100. So my maximum potential profit, 64.50. It's going to total 100. Now, I will show you where that will not always necessarily equal 100. This is because I'm using a limit order. When I get over to the platform, if you use market orders, we have tolerance levels that allow for you to have a little bit of slippage because the markets can move quickly. I will talk about tolerance levels later. But on the order ticket, we very clearly tell you before you even place your order what you could potentially make and what you could potentially lose. Now, that is the first thing, is we told you you got a price and it's going to be the dollar amount. It's going to be a very easy dollar calculation. It is also the probability. If you look at the midpoint of this bid ask, and we know it's 33.75, we tell you now, and this is currently in demo, it's going to be released to the live environment, I believe, tomorrow. It's telling you right now that there's a 33.75% chance that this will finish in the money. We will calculate that probability of in the money for you on the order ticket. Now, I can tell you it's the midpoint, but sometimes these markets can move pretty quickly. The bid-ask spreads expand and contract. You don't have to sit there and keep doing the math in your head. The probability as calculated by the marketplace at this moment in time, the probability of it finishing in the money, the probability of it going to 100 will be calculated for you on the order ticket. Now, we also give you a max return on investment. Now, what is that? That is going to be calculated based upon the current ask price or the current bid price. If I'm selling, it'll be based on the current bid price. If I'm buying, and you can see I'm buying because blue is currently lit, this max ROI is based on if I were to buy one at 36.75, or if I were to buy one for 36.75, if it were to go to 100, I would be making 166.67% return on my money. All right, we're going to give you those return on investment calculations on the order ticket. Namely, I'd be risking 35.50 to potentially have it go to 100 and make 64.50, and we have included your transaction costs in that calculation. So that is your max ROI. We've put in the cost of your transaction, and that is what your potential return on investment would be. Now, why is this a greater than 100%? Because I'm buying something at less than 50. If I were buying something greater than 50, my ROI is going to be a little bit lower. And again, we do the math for you. It does help you in trying to gauge the risk versus reward that you want to take. And we calculate that for you on the order ticket before you place your trade. Everyone, I do see someone had to bounce, and that's okay. They asked if there's going to be a recording. Yes, I'm recording this. You will be able to, we'll send you a link to where the recording will be. Hopefully we'll have it available to you later today, if not early tomorrow. All right, so now let's talk about price, time, and the underlying market, okay? This is where volatility and time to expiration come into play. Now, we've already mentioned that the price can be thought of as reflecting the probability of the event being true, and that probability is going to fluctuate. And it doesn't always necessarily move in line with the underlying. Just because the underlying goes up does not necessarily mean the price of the binary has to go up. And there's a reason for that. That can happen because time or volatility has changed. So volatility and time to expiration do impact the price of a binary option. Now let's walk through one example. I am not going to go through the next two examples in depth, but you will be able to follow along with them pretty quickly once I go through this example. Here's a Forex example. Will the Euro USD be greater than 114 at 3 p.m.? And we've got a chart of what the Euro USD did during this time period. And here's the 114 level. This is where it would be a 50-50 proposition. And at the end, on the right, is expiration. Now, early on in the day, with plenty of time to go, the Euro USD was above 1.14. Right? You can clearly see it's above the line. And at that moment in time, the market was pricing the binary option around, and I'm going to use the midpoint, 56. The market was giving it a 56% probability that this was going to go to 100 or settle at 100 at expiration. Now, early in the day, the price dropped. Now, the price of the binary also dropped, where it went down. It dropped some. It didn't drop a ton. It dropped down to the midpoint is 44. Now, why did it only drop to 44? Because there is still a lot of time left in the day, right? So there's still a lot of time for something to happen. Now, skip ahead to the midday, and the price is about where it was earlier in the day, and what you're actually seeing there is what we call decay, time decay. The price of the Euro USD is below 1.14. It's about where it was earlier in the day when the binary option was trading around 44, but now the binary option is only trading for 36. Why is that? Because half of the day is gone and there's less time for something to happen and for it to rally back up and finish above 1.14. Now we skip ahead and it makes a move to the upside. Notice now, with less time left in the day, the change in the price of the binary option was a bit more dramatic. It went from 36% all the way up to 74%. Now, it drops back down again, and it's even much more dramatic. Even though the price of the binary is higher than where it was earlier in the day, it's now only down at a 24% chance because the day is almost over and it is below 1.14. And then in the end, if it finishes below at 114 or lower, it's going to go to 0. And if it finishes above 1.14, and it doesn't matter where that is, 1.1401, it would go to 100. Now, in this example, it went above it and stayed above it, and it went to 100. But you can see how volatility and time can impact the price of the binary option. As time goes on and there's less time left, the price of the binary option will change because there's less time. If there's a lot of volatility, you'll see how the price of that binary option can change, and it can swing around throughout the day. This is one of the reasons why people like binary options, is it creates a lot of trading opportunity. If you can catch a move and there's not a lot of time left, you'll see some great price action in binary options, right? So instead of a buy and hold or sell and hold strategy, you can actually trade these several times throughout the day. And we're going to get to that too in a bit. Now, I'm going to walk through another couple examples just quickly. The first is where it just stays below the price the whole time. And this is a very low volatility environment. Now, because it's below 1.14 now, it's currently trading less than 50%. And you'll just notice throughout the day, it just starts decaying away. This is what I meant by when the price of the underlying can go up, but the price of the binary can go down. From midday till right at the end of the day, the price of the Euro USD actually went up. It went higher. You can see that's higher on the chart. But the price of the binary option went from 34% down to 20%. So even though the price of the Euro USD went up, the price of the binary option actually went down. And the reason that is it's a low volatility environment and there's very little time left for something to happen. Now, can it happen? If it's trading at 20%, yeah, 1 in 5 times, this might pop up above and finish just above 1.14, in which case it would go from 20 to 100. In this particular example, it didn't, and it went to 0. So it stayed below and it decayed, and it went from 44 early in the day all the way down to 0 at expiration. Here's the example of it where it's above, right? So instead of working its way down towards 0, it works its way up towards 100. It starts off at 54%, it goes to 66, it goes to 80%, and ultimately, in the end, even though the price went down, notice from the 80%, it could have dropped all the way down to 1.1401. It still would have settled at 100 as long as it's above 1.14. Okay, so you see now how volatile and high volatility and low volatility can impact the price, and as time goes on throughout the day. All right, enough about that. I do want to talk about the choices that Nadex offers. We will have a variety of conditions. So for each underlying market and each underlying time frame, we're going to have a bunch of different conditions or strike prices. So you can choose. And if there's a lot of volatility, we'll add additional strike prices. Now, here's an example, and I just grabbed something, here's a 5-minute binary options example where we've got a bunch of different products. And if you opened up any one of those products, you'll see that there are different conditions, different strike prices that you can choose from. And each one of those conditions is going to have a probability associated with it. And so you get to choose a product, whether it's Forex, indices, commodities. You get to choose the specific product within there. Then you can choose the time frame. And again, we've got 5-minute binaries in FX. We've got 20-minute binaries in equity indices. We've got hourly, 2-hourly. We've got daily, and we've got weekly binary options. You can choose the time frame that suits you, and then within each one there are going to be multiple conditions, and you can choose which condition you want to trade. I mean, some of these conditions you might say, hey, there's no way it's going to get up there, I'm going to sell that. But this one, I think it's going to be it is going to be above. And so there's different strategies where you can mix and match some of these if you want. Now, I hinted at this, and if you take nothing else away from this session, this is important. So I'm shouting out loud. An important rule when trading binary options, and this is really, really important. Just because there's an expiration associated with the contract does not mean you have to wait until expiration to see what happens. That is so important that I'm going to repeat it again. Just because there's an expiration does not mean you have to wait until then to see what happens. You do not have to wait for it to go to 0 or 100. You can choose to exit your position early. And why would you want to exit a position early? There's 2 reasons why you would exit a position early. One would be to lock in a profit. Hey, I bought a binary option for 20. I paid $20. I'm thinking I can make 80. That would be great. But I buy it at 20 and it goes to 50. All right, now it's an even money. Do I have to wait for it to do? I mean, maybe I want to hang on to it and I want to let it go to 100. That would be great. Or it's early in the day and I might be happy making 150% return on my money. I bought one at 20. I can sell it back at 50. I'm out of the trade. I made $30. I risked 20. I made 30. And I can reassess and I could potentially do another trade. The other reason why you would exit early is to limit your losses. I bought one at 40. I bought one at 40. I was hoping, or I was looking, I was predicting that it would go to 100. I wanted to risk 40 to make 60, and it dropped down to 20. I was wrong. Do I have to lose all 40? The answer is no. I risked 40. It went down to 20. I'm going to reassess. Maybe I want to keep it. Maybe I don't. Maybe I'm happy and just say, you know what? I risked 40. I sold it at 20. I only lost 20. I cut my losses in half. Let me reassess. So you can exit a position earlier if you want. I'm going to show you that on the platform. That is really important. I cannot emphasize that enough. I will say that some of the more successful binary option traders that I have seen tend to lock in their profits, but a lot of it is really minimizing their losses when they're wrong, being able to admit that you were wrong, cut your losses, and move on to the next trade. If you've got any questions, I think I've got, because it's been great, and thank you for typing in questions and giving me some feedback as we've been going along. If there's anything that you have that I didn't cover, if you've got questions about the product, about the account, about your account, about the platform, whatever it is, if you need help, we can't help you if you don't reach out. Please email us, customerservice@nadex.com. I would also recommend that you follow us on social media. Probably the biggest one there would be YouTube. I can't emphasize this enough. We are publishing content every day to YouTube. And if you're not familiar, every morning we live stream. Every morning at 7:45 a.m. Central, 8:45 a.m. Eastern. We live stream. We take a look at what happened overnight. We take a look at the upcoming events for the day. We look at charts. We do some technical analysis and I help identify potential hotspots in the market for that day before the open. So if you go to our YouTube channel, you just go to YouTube and look up Nadex. You can subscribe to the channel. I'd recommend it. And if you look at our live streams, you can set reminders to remind you that we're going live. We have a fairly significant audience that joins us live every day. Those recordings are also immediately available on our YouTube channel. So you can even go back and play this morning's live stream if you'd like to get an idea of what we do. They go for about 15 minutes, maybe 20 minutes max, but we just jump in, take a look at what's going on in the markets, what's going on in the world, where are there some potential hotspots, and it might help you generate some ideas on where you might want to be looking and when you might want to be looking at the markets for potential trading opportunities. So again, that is on YouTube. We live stream every morning, and it's a great resource to people at Nadex. I am now going to go into the off-roading session. I am going to bring up the platform and we're going to play around a little bit. And I want to show you how some of this works, because I find once we've talked about the theory, let's go ahead and talk. Let's show you. Let's take a look at it. I'm not going to be doing a deep dive into the platform. We do platform sessions. You can take a look on the Nadex website. You go into learning webinars and you can take a look at what's coming up. And we also got recorded content on our YouTube channel as well as on our website. If you wanted to take a look at some of that on the platform, it's available, or join us for an upcoming session. Now, in the binary options, you can see, and next week we'll cover knockouts and call spreads. If you're not familiar, we will cover those next week. But with our binary options, you can see we've got indices, Forex, commodities. We also have our short-term 5-minute binary options. I am going to go through an example of this in 3.5 minutes because I really think that it gives an exclamation point to understanding how the price of a binary option moves around. We've got 20-minute binary options in indices. I said we were going to be looking at gold, so I'm going to go ahead and take a commodity. You can see we've got, let's refresh because these expired. We've got gold coming up in 13 minutes. This contract's going to expire. We've got daily at 1:30 and 42 minutes. We've got weekly contracts. And so we've got a variety of expirations. It all depends on the product. And in crude oil, we've got one at 1 p.m., we've got one at 2 p.m., the daily contract at 2:30, and then a weekly. Inside each one of these, there is going to be a variety of conditions. Let's actually take a look at the 1 p.m. It looks like, right? And you can choose which level suits your trade. Now, when you look at the chart, you can quickly and easily trade from the chart. If I wanted to buy one, I can click the buy. If I wanted to sell one, I can click the sell. Notice that when I do that, if I thought gold were going to close below 1805, it is currently trading 1805 point. I mean, this is right here. Do I think it's going to finish below? Well, right now, the market is actually the midpoint. Well, that's interesting. That isn't. Oh, that's right. All right, right. I'm sorry. All right, you're right. If I'm selling, right, it's 100 minus. I apologize. If I'm selling, the midpoint right now is 52. 100 minus 50. Well, now it's lower. It's 48. If you're selling, it's going to be 100 minus the midpoint. If you're selling, it's 100 minus the probability of your sell going to 0. All right. That's going to give you your probability of success. If I'm buying, it's going to be the midpoint, right? And it's going to tell you right now they're predicting the midpoint. Look how quickly these probabilities move. Now, if I buy it at 49, it's telling me, well, if I buy one, the probability of my ROI is going to change with the offer if I'm buying. If I'm selling, the probability will change. Look at that, gold just dropped. And you saw the probability on this particular contract, this 1805. It went from in the 50s down to in the 30s pretty quickly, didn't it? All right, I do want to take a look. Let's see. All right, there's 36 seconds. We'll come back in 36 seconds. But you can see how the probabilities move very quickly, particularly as there's 10 minutes left in this contract as we get closer and closer to expiration. I'm going to go through a 5-minute binary option, and then I want to come back and show you how you can place orders between the bid-ask spread, how I can exit a position, how we've got some very easy functionality to close a position. So let's jump over to these 5 minutes. There's 6 seconds left. Let's open these up. I'm going to wait until this resets. All right, refresh. Okay, let's take a look at the Euro USD, and I'm going to bring up, and I'm going to make this a 1-minute chart. Let's get this out of the way, and I'm going to zoom way in. Oh, sorry, way in, and let's open this. Open this up. I want to make this bigger so we can really see it. I apologize. Okay, there we can see the strikes, and we can see what's going. Let's move this down for now. Okay. So we can see the different strikes, and we can see. All right, let's just right now. This for this particular strike, the 1761. Right, this is kind of roughly the at the money. All right, notice as this moves around. Oh, you know what I want to do? I want to show all the strikes. Sorry. We can watch the probabilities. The probability up here right now, it's pretty low. The probability down here is pretty high, and here it's just below 50. Now, if I think this is going to keep going lower, I can sell one, all right? And if I sell one at 42.50, I can place an order. Notice this is my order. I placed an order to sell one at 42.50. Now, am I going to sell it? I don't know. Someone would have to buy it from me, all right? But notice, oh, now there's my order. You can see my one lot. Someone traded it with me. I now sold one at 42.50. Now, what can I make? I can make 42.50 if it goes to zero. What can I lose? 57.50 if it goes to 100. Now, as the price of the underlying goes higher, notice that we've only got 3 minutes to go. This, maybe I was wrong. Maybe I can say, you know what, forget it. I'm going to bring up my position. And if I want to exit this position because I'm not comfortable, I don't have to lose all of it, I can hit close and I can close my position and it will send a market order and it just closed my position. I cut my losses. Notice that I sold it. Why is that's strange? Right? I don't have a position. I don't know why my history isn't showing up. This is, by the way, this is in a demo environment, so I'm going to have to, I don't know what happened. Now, did I need to sell this? No. Could I have held on to it? There's still 2.5 minutes, but I wasn't comfortable. I bought it. I sold it. I bought it back. I'm out. Now, what else could I potentially do here? I can just sit here and wait. I mean, right now it's between these two strike price levels. Do I think it's going to go higher? Is it going to get above 1763 and settle above there? If I think no, I could actually try to sell one, up here and try to make back some of my losses. If I wanted to try, let's just go ahead and place one there at 11.5. Maybe I'm trying to, and it does calculate. Now if I were to sell one at 11.5, the probability of it finishing in the money is pretty high, but my return on investment would be pretty low. Now, I've got an order in here. Do I have to let that sit there? No, if I click on this order, I can simply delete the order. I've got no orders. So you can place orders, and I'm going to do this a little bit slower. I did want to show a binary option on steroids. This is what happens in the last 5 minutes. These probabilities will move dramatically. And they will, remember, in the end, all of these will either go to 0 or 100. If it finishes above, it goes to 100. If it finishes below, it goes to 0. Now, notice that there's still 54 seconds left to go. Well, this is interesting. As it's ticking down, I mean, let's just kind of wait and watch here. Oh, now it's ticking back up. If it were to drop through, this would drop very quickly from this roughly 90%. Right? I mean, right now they're giving it an 88% of finishing in the money. This probability would drop very quickly in the last 30 seconds. Now, in the last 30 seconds, you notice that some of these prices disappear. Right? Now, why is that? We do have market maker streaming, and because they can be so volatile, prices will disappear in the last 20 to 30 seconds, which is why a lot of people will get out of their position before actual settlement and expiration, so there are no surprises. We got 4, 3, 2, 1, and there we are. This contract settled at 100. The other one settled at 0. We get a new cycle. I refresh, and we've got an entirely, wow, our demo environment's doing something very strange right now. Huh. Let's go back in here again. I gotta find, I don't know why our demo environment is acting a little finicky right now. There we go. But it is. It can happen. It's a demo environment, not a production environment. But it will reset, and you'll have a bunch of different expirations. Now, what I do want to do is go through that a little slower. All right, I'm not going to do a 5-minute. I wanted you to see how the probabilities move quickly. Let's go back to our commodities. Let's go back to gold. Let's look at you know what? Let's look at weekly. We're going to go, now with weekly, there's going to be greater room between the strikes. Right, so you won't see as tight of a strike range. Let's do this. Let's show my strikes. Strange. There it is. Hey, there we go. There's the strike. Now you can see how far apart these strike prices are. on a weekly contract, I am going to do this. We're just going to look at this one contract. Okay, and I'm zooming in on purpose. Oh, by the way, I don't want a 1 minute chart. Let's go ahead and move this since we're looking, you can move this to a 30-minute chart. That's actually probably a little bit better. Makes it a little bit easier. I use a 1 minute chart when I'm looking at 5-minute binary options. It makes sense to use a 1 minute chart with 5-minute binary options, but this actually expires in a day, maybe a 30-minute or a 15-minute chart. You've got to make a determination on what time frame. Notice how you can set your time frame for each one of these. If you're not familiar with charts, we do some technical analysis, basics of technical analysis, so you can understand these candlestick charts, as well as we look into some of the tools, technical analysis tools and drawing tools that are available on the Nadex platform. Now, let's just go through what I wanted to show you, though, in a little bit slower motion, because we're looking at a weekly contract in gold. Will gold finish higher than 1803.50 at 1:30 in a day at 1:30 p.m. tomorrow? It's a weekly contract, so there's only 1 day left. Notice if I'm buying, all right, if I try to buy, the midpoint about 50 is 55.5%. If I were to buy one, the probability of my trade being in the money is the midpoint between the bid-ask spread. If I were to sell one, my probability of my short being in the money is 100 minus the midpoint. Right, so it's telling me there's about a 44% chance of me being successful on my short, meaning it settles below. Why is it lower than 50%? Because it's got to go down to be 50% and then go and finish at or below that price for it to go to 100. Now, if I were to sell one, I'm selling one above 50, so my max loss is less than what I could potentially make. I'm risking 47 to potentially make 52. If that were to happen, I would make 107% return on my money. I would do a little bit better than doubling my money. If I were to buy one, and let's say I were to buy one at 59, right? I'm risking 59 and a quarter to potentially make 40.75. That would only be a 65% return on my money. I'm risking more to make less, but it's a higher probability trade. This is why we give you the max ROI and your probability of finishing in the money. Now, let's go ahead and choose. If I think gold, we're going to keep going higher. All right, now I'm going to go to a smaller priced binary option. Notice that the midpoint, this binary option, what we call out of the money, if I'm buying it, if I were to buy it, there's only a 20% chance that it's going to be successful. I'm risking 23.75 to potentially make 76. I would nearly triple I would actually more than triple my money. I would make over a 300% return if I were to buy this and it finished above and went to 100. So here, my return on investment is high, but my probability, as determined by the market price, is lower, 1 in 5 times. So it helps you understand that risk-reward relationship between what you're trying to do. Now, do I have to trade on these prices? If I wanted to buy one of these, maybe I would want to put a bid in at 21. All right, I would want to buy it at 21. I can place my order to buy one at 20. Well, look at that, immediately moved away. Let's make it higher. Let's make this 22. I'm going to place that order. There's my order to buy it at 22. All right, we could see my order is here. All right, I'm trying to buy one at 22. If I bought one at 22, I'm risking 22 to make 78. All right, that's all calculated. Am I necessarily going to buy it there? Not necessarily. Someone has to want to trade with me. I am going to go ahead and buy one at 27 because I want to have both. Oh, it looks like did I send this order in? Oh yeah, there's my 21 bid. Let's go ahead and cancel that one. I'm going to click on this and I'm going to notice when I click on it, I could also amend my order if I change my price. I'm just going to go ahead and delete it. So what have I got? All right, I've got an order to buy one at 22. All right, it's below. All right, it's currently below the market. And then I did buy one. I paid 27 for one. Okay. Now, if I want to close that, it would just close my position. I could close my position, and it would just send a market order to close my position. I don't want to close it. I'm just going to leave that position in there. Now, what else could I potentially do? All right, I'm going to click on this order again. Now, I bought one at 27. Now, maybe I'm not, I just want it to go to 50. I'm looking to maybe 54. I want to double my money. I want to buy it at 27 and sell it at 54 if it were to pop up there. Could I offer one at 54 up above? And the answer is yes. I could simply go in here and say, put 54 in as my price. All right. I am trying to sell one at 54 up above. All right. I place my order. Notice now that I've got two standing orders. I've got one to buy one at 22 below. All right. I'm also trying to sell one at 54. Now, if it gets up to 54 and I sell it, this position would be gone. All right. I bought it at 27. So what I've done is I placed an order, and if I'm not paying attention to the markets, I could potentially sell it and get out at a profit if it were to go higher. So you can place a bid in between the bid-ask spread or lower. You can place an offer. I could place a bid between the bid-ask spread or lower. I can place an offer to sell between the bid-ask spread or higher, and I can have orders away from the market. All right, I've got orders away from the market, or I could put them between the market, and I could manage my position accordingly. I do not have to wait until expiration to see what happens. All right, and we do calculate on the order ticket when you're doing the trade what you could potentially make and what you could potentially lose before you place the trade. And we even do some calculations, whether you're buying or whether you're selling, the probability of your trade being successful, as well as what your return on investment would be if you were to buy on the offer or if you were to sell on the bid. All right, with that, I want to thank you all for joining me. I went a couple minutes over. I want to remind you that this was recorded. I will make it available both on our YouTube channel as well as on our website. And again, I would highly encourage you to follow us on YouTube, subscribe to the channel, and set reminders, particularly for those morning sessions where we do some daily analysis of potential hotspots in the markets, and we live stream it. So we make it available to you. We go live, but those recordings are also immediately available if you're unable to join right then. With that, thank you for joining today. Thank you for being customers at Nadex, and I want to wish you all good luck in the markets.